As of November 26, 2025, Bitcoin is trading at $87,536, a price point that has become a psychological battleground for traders and investors alike. After a period of intense volatility, the cryptocurrency now finds itself in a holding pattern, with market participants closely watching every tick and candle. Locked in a narrow range just below $88,000, Bitcoin's price action is eerily calm, almost as if the market is collectively holding its breath. The charts show a persistent sideways movement, with neither bulls nor bears able to seize control. This calm follows a dramatic and sudden drop to a 7-month low near $80,000, a move that erased weeks of hard-fought gains in just a matter of days. The memory of that plunge still lingers, casting a long shadow over current trading activity. The market is tense, with buyers and sellers at a stalemate. No clear direction, just cautious consolidation. Every participant seems to be waiting for someone else to make the first move, creating an atmosphere thick with anticipation and uncertainty. Traders are on edge, their eyes glued to screens, scanning for any signal, no matter how small, that could break the deadlock. The fear of missing out on the next big move is palpable, but so is the fear of getting caught on the wrong side of a sudden swing. Trading volume is subdued. Many are waiting on the sidelines, wary of another sudden move. The lack of decisive action has led to a noticeable drop in activity, as traders prefer to wait for clearer signals before committing capital. The memory of the recent plunge is fresh, fueling hesitation and hyper-awareness of every small price change. Even minor fluctuations are enough to spark anxiety, as traders remember how quickly the market can turn. Each minor fluctuation is scrutinized for signs of a breakout or breakdown. Technical analysts pore over charts, searching for patterns or signals that might hint at the next direction, while fundamental traders keep an eye on news and macroeconomic developments. This isn't boredom, it's a high-stakes pause, with the next big move hinging on investor psychology and macroeconomic forces. The outcome of this standoff could be influenced by anything from regulatory news to shifts in global economic sentiment. The current standstill is a critical juncture for Bitcoin, with the market holding its breath. Every trader knows that periods of low volatility often precede explosive moves, and the tension is building with each passing hour. What happens next could set the tone for the rest of the year. Whether Bitcoin breaks out to new highs or tumbles further, the decisions made in this moment of calm will echo throughout the market, shaping sentiment and strategy for months to come. Bitcoin's rapid fall to $80,000 rattled the market, shaking investor confidence and shifting sentiment from optimism to caution. Many newer investors were caught off guard, learning firsthand how volatile crypto can be.
The fear from that drop has created a feedback loop. Traders hesitate, volumes drop, and the market stays range-bound.
Professional and retail investors alike are reassessing risk, reluctant to make bold moves. The mood is now one of sober caution, with the memory of the plunge acting as a psychological barrier. Rebuilding confidence will take time and either sustained stability or a clear upward trend. Until then, every headline is a potential catalyst, and unease lingers.
The market's next direction depends on whether fear or hope wins out.
For now, caution is the dominant force shaping Bitcoin's price journey.
Bitcoin's turbulence has rippled across the crypto landscape, but not all assets are reacting the same way. While Bitcoin's price swings often set the tone for the entire market, this time we're seeing a more nuanced response from other major cryptocurrencies. Some coins are showing surprising strength, while others are struggling to keep up.
Ethereum has shown resilience, trading slightly up at 2,134.92s, even as Bitcoin drifts lower. This upward movement suggests that Ethereum is carving out its own narrative, driven by factors like its upcoming network upgrades and the growing popularity of decentralized finance applications built on its blockchain. This hints that some investors see unique value in Ethereum's ecosystem. Its smart contract capabilities and active developer community continue to attract attention, even in uncertain times.
XRP, meanwhile, dropped 2.2% to $2.19, reflecting project-specific risks and ongoing legal battles. The uncertainty surrounding its regulatory status continues to weigh heavily on investor sentiment, making it one of the more volatile assets in the top 10.
Other major altcoins like Solana, Cardano, and Polygon are mostly flat, mirroring the market's cautious mood. These projects, while innovative, are currently treading water as traders wait for clearer signals from the broader market.
Even meme coins like Dogecoin and Trump are unusually quiet. Speculation has cooled. The days of wild price swings and viral hype seem to be on pause, at least for now.
The entire market is in a holding pattern, waiting for Bitcoin to make the next move. Traders and investors alike are hesitant to commit until there's a clearer direction.
When Bitcoin is uncertain, risk appetite for altcoins fades. Many see Bitcoin as the bellwether, and its indecision often leads to a broader market slowdown.
The stillness across the board signals a shift to risk aversion. Investors are choosing to wait on the sidelines rather than make bold moves in this environment.
For now, the crypto space is watching and waiting. The next catalyst could come from a regulatory announcement, a major technological breakthrough, or simply a decisive move from Bitcoin itself.
The next big move will likely start with Bitcoin. Until then, the market remains on edge, with every trader's eyes glued to the charts, waiting for a sign of what's to come. To understand crypto's tension, look to traditional finance, specifically U.S. Federal Reserve interest rate policy. When the Fed cuts rates, borrowing gets cheaper, often boosting risk assets like crypto.
Lately, softer economic data has fueled hopes for a Fed rate cut, possibly as soon as December.
Lower rates make safe investments less attractive, pushing investors toward higher risk assets.
For crypto, this could mean a fresh wave of investment and a break from the current deadlock.
The market is laser-focused on the Fed's next move. A rate cut could be the catalyst Bitcoin needs.
Cheaper money could reignite the crypto rally.
All eyes are on the Federal Reserve. The Federal Reserve's policies are a major force behind Bitcoin's price swings, and for good reason. Every time the Fed makes a move, whether it's raising, lowering, or holding interest rates steady, the ripple effects are felt across the entire financial landscape, including the world of cryptocurrencies. Investors know that the Fed's decisions can change the direction of markets almost overnight, making it a key player in the fate of digital assets like Bitcoin.
Bitcoin is often called a risk-on asset, meaning it tends to do well when investors are feeling confident and interest rates are low. In those times, people look for higher returns than what they can get from traditional safe havens like bonds or savings accounts. That's when crypto starts to shine, attracting capital from those seeking bigger gains.
When money is easy to borrow and interest rates are low, it fuels risk-taking and speculation. That's exactly what happened during the last big crypto bull run, when Bitcoin and other digital assets soared to new heights. But when the Fed tightens policy and raises rates, borrowing becomes more expensive, and investors get cautious. This shift has been a major headwind for crypto prices, leading to sharp downturns and increased volatility.
When safe investments like government bonds start offering solid returns, risky assets like Bitcoin lose some of their appeal. Investors naturally gravitate toward options that offer stability and predictable income, especially in uncertain times. This dynamic can pull money out of crypto and into more traditional assets.
That's why every Federal Reserve meeting is watched so closely by crypto traders. Each announcement, press conference, or even a hint of a policy change can send shockwaves through the market. Traders and investors hang on every word, trying to anticipate the Fed's next move and position themselves accordingly.
The big hope among crypto investors is for a pivot, a shift from raising rates to cutting them. Such a move would signal that the era of tight money is ending, and that more liquidity could soon flow into riskier assets.
A rate cut could be the spark that ignites the next major bull cycle in crypto. It would make borrowing cheaper, encourage investment, and potentially drive a surge in demand for digital assets like Bitcoin.
For many, it would mark the end of a challenging period and the start of a new era for risk assets. Optimism would return, and we could see renewed enthusiasm and inflows into the crypto market.
That's why the crypto community is hanging on every word from the Fed, analyzing statements and forecasts for any sign of a shift in policy. The stakes are high, and the next move could set the tone for months or even years to come.
If the Fed signals a more dovish stance, it could send Bitcoin and other cryptocurrencies to new highs, reigniting excitement across the market.
Ultimately, the Federal Reserve's next move could define the future of the crypto market, shaping investor sentiment and determining where the next big opportunities will emerge.
Speculation is swirling about a possible leadership change at the Federal Reserve. Kevin Hassett, a former Trump advisor, is rumored as a potential new chair. Markets see Hassett as likely to favor faster, more aggressive rate cuts. This prospect has injected optimism into risk assets, including crypto. A more dovish Fed chair could accelerate the timeline for easier money. Investors are already adjusting strategies in anticipation. The possibility of a leadership change adds a political twist to economic forecasting. For crypto, it's another reason to be hopeful about a market recovery.
A dovish Fed chair could be a game changer for Bitcoin and digital assets. Aggressive rate cuts would loosen financial conditions, making crypto more attractive. This could break Bitcoin out of its current range and spark a new uptrend. Institutional investors might finally jump in, fueling a positive feedback loop. A new chair could also influence the regulatory climate, indirectly shaping crypto's future. But aggressive cuts carry risks. If mishandled, they could stoke inflation and market volatility. For now, the market is focused on the upside. A dovish Fed is seen as a powerful tailwind for crypto prices.
Beyond macro trends, regulation is key for crypto's future. The CFTC just announced a new CEO Innovation Council, inviting industry leaders to help shape crypto regulation. This signals a shift from regulation by enforcement to a more collaborative approach. The council will tackle issues like stablecoins, tokenized assets, and market structure. The move is seen as constructive, aiming for sensible, innovation-friendly rules. Clear regulations could unlock institutional investment and long-term growth. The deadline for nominations is December 8th, showing the urgency. This is a foundational step toward a more stable crypto market in the US.
For newcomers, today's crypto market can seem overwhelming. Tense prices, economic uncertainty, and regulatory shifts.
The key is to understand that crypto prices are shaped by more than just technology, macro trends and policy matter.
Be prepared for volatility and never invest more than you can afford to lose.
Think long-term. Focus on technology and regulatory progress, not just short-term price swings.
Timing the market is nearly impossible. Stick to a clear strategy.
Keep learning. Staying informed is your best defense.
The current mix of caution and optimism is a valuable learning opportunity.
By understanding these forces, you can navigate crypto's ups and downs with more confidence.
The market's next move is uncertain, but knowledge is your best asset. Stay curious, stay cautious, and stay in the game.